Imagine opening your mailbox. Among the junk mail and bills, there is an envelope. You have been selected for an IRS audit. In 2026, the IRS isn't just a group of people wearing glasses and looking at receipts. They are armed with an $80 billion budget upgrade and sophisticated artificial intelligence. This AI can scan millions of tax returns in seconds to find anomalies. Welcome back to Squirrel Fox Money. Today, we are walking through the minefield. We are discussing the 5 IRS red flags that are most likely to trigger an audit in 2026. Disclaimer: I am a cartoon animal, not a CPA. Always consult a professional. Let's start with the basics. What is an audit? Usually, it's not men in black suits knocking on your door. Most audits are correspondence audits, just a letter asking for proof of a specific deduction. But if you ignore it, or if the red flags are too big, it can turn into a field audit, where they come to your house or business. You do not want that. Red flag number 1, the math mismatch. This is the most common trigger, and it's completely avoidable. The IRS has a supercomputer called the Information Returns Master File. When you get a W-2 from your boss, or a 1099 from your freelance gig, or a 1099 div from your stocks, the IRS gets a copy too. Their computer says you made $60,000 and you report $50,000. The AI flags you instantly. It doesn't matter if it was an accident. In 2026, with crypto exchanges and payment apps like Venmo reporting directly to the IRS, you cannot hide income. If the numbers don't match, you get a letter. Red flag number 2, the hobby loss rule. This one is for all the side hustlers. Do you have a business that loses money every single year? Say you love photography. You buy a $5,000 camera and write it off as a business expense. But you only made $200 taking photos. You declare a $4,800 loss to lower your taxes. If you do this for 3 out of 5 years, the IRS will classify your business as a hobby. They will disallow all your deductions and make you pay back taxes and penalties. A real business tries to make a profit. If you are always losing money, you are waving a giant red flag. Red flag number 3, the Tyler's excessive deductions. The IRS AI compares your tax return to everyone else in your income bracket and zip code. They call this the DIF score, discriminant information function. If the average person making $100,000 donates $3,000 to charity, and you claim you donated $40,000, the computer sounds an alarm. Same goes for business meals. If you are a freelance web designer making $60,000, but you claim $20,000 in travel and dining expenses, it looks suspicious. You can take deductions, but they must be reasonable and ordinary for your industry. Red flag number 4, the 100% business use vehicle. This is a classic trap. You buy a nice SUV for your business. You claim on your taxes that you use it 100% for business and 0% for personal use. Really? You never drive it to the grocery store? You never pick up your kids? You have another car sitting in the driveway for personal use. The IRS agents know that 100% business use is extremely rare. If you claim this, you better have a detailed mileage log showing every single trip, date, and purpose. If you don't have that log, they will deny the deduction and slap you with a penalty. Red flag number 5, round numbers. This sounds silly, but it is true. When you list your expenses, are they all nice, clean numbers? Advertising, $1,000. Office supplies, $500. Travel, $2,000. Life is not that clean. Real expense is $1,042.36. Round numbers tell the IRS that you are guessing or lying. Rather than looking at actual receipts, estimation is not allowed. Precision is your best defense against an audit. So, how do you sleep at night? Simple. Be a squirrel, not a fox. Keep your receipts. Use a digital scanner. Separate your business and personal bank accounts. If you have documentation, an audit is just an annoyance, not a disaster. But if you have been playing games, the AI is watching. Which red flag are you most worried about? Let me know in the comments. And if you want to keep your money safe from the taxman, subscribe to Squirrel Fox Money.